Hello everyone, this is Equity Management Academy with the weekly gold report for October 1st, 2021. Summary. The weekly trend momentum of 1783 is bearish. The weekly VCPMI of 1749 is bullish price momentum. A close below 1749 stop negates this bullishness neutral. If short, take profit 1733 to 1705. If long, take profit 1777 to 1793. Trading instructions. Weekly trend momentum, 1782, bearish. The gold futures contract closed at 1764. The market closing below the 9-day SMA 1782 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum, 1749, bullish. With the market closing above the VC weekly price momentum indicator at 1749, is confirmation that the price momentum is bullish. A close below the VC weekly, it would trigger weekly stops and negate the bullish trend to neutral. Weekly price indicator. Exit, longs. Sell 1, 1777. Sell 2, 1793. Exit, shorts. Buy 1, 1733. Buy 2, 1705. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1733 to 1705, and go long on a weekly reversal stop. If long, use the 1705 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1777 to 1793 during the week.
Good morning, everybody. This is Patrick MontesDeOca, once again with the Equity Management Academy live trading room. We have a really fast market condition in the precious metals here. And the latest economic news that came out actually was the CPI that was stronger again than expected. And let me take a look. U.S. consumer prices outpace forecast as inflation dogs the economy. Prices paid by U.S. consumers rose in September by more than forecast, resuming a faster pace of growth and underscoring the persistence of inflationary pressures in the economy. The Consumer Price Index increased 0.4% from August, according to Labor Department data released Wednesday. Compared with a year ago, the CPI rose 5.4%, matching the largest annual gain since 2008. Excluding the volatile food and energy components, so-called core rose 0.2% from the prior month. The median estimate in a Bloomberg survey of economists called for a 0.3% monthly gain in the overall measure and a 0.2% advance in the core rate. A combination of unprecedented shipping challenges, material shortages, high commodity prices, and rising wages have sharply driven up costs for producers. Many have passed some portion of those costs along to consumers, leading to more persistent inflation than many economists, including those of the Federal Reserve, had originally anticipated. So let's come back here to the market, and basically the AI was telling us basically that the weekly average price was 1778. The 9 weekly average price that we use, which is the first filter, was telling us 1778 was bearish. And what you see here is the market early this morning, meeting the target of 1778. And we saw a reversion from the sell 1 daily and weekly level, which was pretty strong, indicating that a reversion is possible from these levels. We did experience this reversion to the mean, and this is a perfect example of mean reversion trading, which is what we teach in our trading room, which is what we do. This is the reversion to the mean principle, and it reverted right down into the average price, and it met the target, but activated a bullish price momentum. Now, I mentioned to you earlier that the average price, the trend momentum is 1778, and that's the bigger picture, that's the bigger trend. And that is called resistance, trend resistance at 1778. And we came in this morning with a daily short trigger, 1779, a weekly signal, 1778. And so we had a lot of harmonic alignment at these levels, and the market reacted accordingly. Now, what we have seen here is the price activate a bullish price momentum. The VCPMI is the price velocity within that bigger trend, which was bearish at 1778. And the AI told us that if we close above 1778, it's going to negate this bearishness now and activate the next weekly target, which is 1799. Once the resistance is broken here, they tried to break the price. They did succeed, but the momentum of price, which means that we got a lot more buyers here, creating the momentum, the velocity that it took us right above the sell 1 daily, the sell 2 daily, the targets basically, or the resistance levels, according to conventional use of these pivot points. So where are we now? Well, what we have done is we have activated a bullish now sentiment with the price closing above the resistance levels. That resistance level becomes the support for the next target, 1799. And if we close above 1799, we're looking at the annual targets, which is above 1800. It's about 1823, in that vicinity. Then we look at the monthly alignment. So we have the markets closing above the resistance levels here. What I want to do is share with you the monthly report that we published on October 1st, in that the 1785 is the monthly average now. Once, let's say, the 1779 level is broken, then we're looking at 1823 to 1888 as the next targets. The market has closed above 1772, which is the monthly average. 1762 was the weekly average. So we are breaking out and reverting the system, the program, confirming potentially that we have made a bottom. Higher than the expected 1741 level, which gave us the harmonic alignment of the daily and the weekly again. And you know, when you see this kind of action, you know, it does increase the probability that the market still could come down to these levels here. So I'm very pleased with our long core position here. We are maintaining a bullish bias, a bullish bias that is hedged for the time being on a bullish directional price movement in case the market accomplishes these targets and reverts back down, because the algorithm, the AI is telling us here that the price is entering a high probability that up here, you might say, we might experience resistance up here. A lot of resistance up here. Nevertheless, resistance is made to be broken depending upon the volume that is showing the bias, and in this case, all the selling that occur here, all the supply is being taken out with strong hands, strong buying that are buying through this price and now has activated in my giant price, which is the 1799 target. So let's watch the market here for a little bit and see what's happening here. The volatility is high, so measure the risk according to your profile. And the next target that we have is 1799. The silver market is also in the area of distribution of supply. It's trading above the target, the 2302 daily target. It's completed the reversion to the mean, and looks like it's headed towards 2321. Let me take a look at the daily chart here. Most traders identify one-dimensional pivot points. And one-dimensional pivot points is interpreted basically as resistance support levels. It's a one-dimensional. What the artificial intelligence behind the algorithm does for us is it gives us a, number one, very definite structure. This is the structure that is the composition of the algorithm that was written in C++ in easy language in TradeStation that you can have access to if you are an automated trader, meaning that the artificial intelligence is what directs your trading. And after being around for a little while, I feel much more comfortable putting my emotions aside and allowing for the AI to identify for us very specific metrics. And in this case, a 5-level metrics. It does not use more than 5 pivot points. And so on the left, you see the daily numbers. The blue is basically, again, the area of support. Green is the average price. And the red levels identify basically the accumulation of supply. So what you saw here the last few days is particularly around September 7th, the market reached a target zone. And when it closed below the weekly sell-to level, it activated a short trigger. The market came down to the extreme below the mean, 2141 as of the 29th of September, and activated this bullish pattern. Let's take a look at the December silver, which is a little longer duration here, and we can see the combination of the annual prices along with the monthly prices that we have on the left of the chart. And the monthly average that you see here is 2284. So the market is trading above the monthly average price and has activated a bullish price momentum. And the target is 2427 to 2638. Now, this signal is going to be negated if it closes below 2284 again. And this is the reason why we say when the price is trading around the average, just be aware that it's going to be choppy and you can get chopped up pretty good. So what we recommend to our traders is that, and what I use basically is the highest probability trades, and that is basically the market going up to the extreme above the mean, which is the area of distribution of supply or resistance, and look to buy into the mean, which is the target. And if it comes down to the extreme below the mean, then we're looking at another high probability area, which is in blue, and that is the accumulation of supply. The red area is distribution of supply. The blue is accumulation of supply. So what we try to do is buy supply and sell it in the area of distribution of supply. And in all fairness, if we're day trading, we want to adhere to the pattern of day trading, or if we swing trade, then we can use the daily and the weekly. And when we use the weekly, you're looking at the weekly still, the weekly is in a long bullish price momentum with a target of 2427. Right above that, you're looking at the 360-day cycle, which is the average of 2494. And this is the big mother of cycles, that if we close above this price, 2494, then we're off to the races all the way up to 2787 and 3372. Let's take a look at gold. And the monthly average of 1772 is activating, as you can see here, a bullish price momentum. And that's the velocity of price within this bigger trend, you might say, that we established by the market coming down below 1778. And as you can see here, several times it tried to get up to that annual average 1840, and that is also the major resistance level, that if we close above that, that is going to be the breakout point in gold, the big annual breakout point, which will accelerate the price on the annual or the 360-day cycle that we talk about, that we published in Seeking Alpha, all the way up to 2003. So we are in a bullish price momentum, and the target for the daily is 1823 on the bigger picture. So what I've done here this morning, I basically reduced some of my coverage if I'm net short, and basically holding on to a bullish synthetic position that I want to carry until the market proves the bigger cycle is breaking out, and that is above 1840. If we take a look at the daily chart in gold, you can clearly see as well the breakout that's occurring. This is breaking out through this resistance level, this Fibonacci trend line resistance level that you see here. These are the lines that you see. We have a cycle bottom expectation unfolding, and the market reverted right from the weekly area of approximately 1725 to 1741. And this bearishness that you saw here is being negated right now by the market with a major breakout to the upside. So the question is actually, is this the acceleration that we've been waiting for? Only the market is going to confirm that, basically, by the behavior or the relationship of price into these target zones. So let's just continue to watch the market here. Continue to hold on to your position here. And ideally, what we want to see is a completion of this price pattern into the blue levels, ideally by the end of the month, because the price is rallying into this distribution of supply area, and we want to pay attention to what it does up here. And that is going to determine for us the strategy that we apply. Let's take a look at Bitcoin. We have met the targets of the sell one weekly of 58,387. And it's trading below the average daily of 56,147, but is in an area of support daily at around 54,078. So it seems to be in a corrective pattern, but not aggressively. So it would be ideal that the price will consolidate at these levels here before resuming the challenge of testing that weekly sell one level again and the target of 62,418. $17.89.20 is last, and the market in gold is very strong today, making a reversion, negating this spoofing that occurred earlier, I would say. And you can see it's headed towards that 17.99 area. It's a tricky time right now, and what we want to see again is the price synergy at these levels up here. And I'm prepared that if we do close above 1840, obviously I'm going to be covering any short hedges, any synthetic positions that I put on, and just allow for the market to go on a net long basis. Thank you again for the opportunity, my friends, to share this with you here, and I do hope that this is making a difference for you in your trading, and I look forward to see you next time. Have a great day. Take care.